Hello, everyone. Welcome to Switch Markets Live. I'm Shane Vernier, head trading coach over at howtotrade.com. Today, we're going to break down a lot of different things that are going on in the markets. We've got Jay Powell speaking. We've got Trump Dog at the NATO summit. We've got all sorts of different things. We've got ceasefires. We've got commodity markets that are still moving around a little bit. We've got U.S. equities that are, I would call flat. I would call deep rotation. Right now, there's lots of ways to make mistakes when it comes to the U.S. stock market at this juncture, but we are expecting just an incredible late week trade. I think that things are going to really pick up here towards this afternoon here in the United States, and then also tomorrow and Friday. So it's good to see everybody back. This is our fourth or fifth installment of the Switch Markets Live series, which is going to be soon. We're going to be doing a lot more of these streams, probably as soon as next week. We're going to be doing a lot more with just Switch Markets. So remember, sort of the principle and the guiding tenet of this live stream is Q&A. If you guys have any questions at all, be sure to ask. If you're a Switch Markets client and you want to know something, ask me. If I know, I'll be sure to help. If not, then I'll tell you exactly where you can find the answer, or I'll just say, I don't know. You're on your own with that one. So remember, there's only a few rules on these streams. The first one is if it makes money, it's the right answer. The second one is simple is always better. And the third one is if I don't know, I'm not going to sit here and try to lie to you and say that I do know. No one can know everything. No one can know everything, but we do know quite a bit, and we're going to go ahead and help any way we can. So I want to welcome all my friends over at the How to Trade community. We see Tuku in the room, Lita in the room. Welcome. A couple longtime members of the How to Trade community. And what we're going to do today is we're going to run through some trade follow-ups. I got a trade idea that I've got out there right now that's facing the guppy, the Great Britain pound Japanese yen, that we're going to look at. We're going to do our news blast. We're going to take a look at some of the news of the day, mortgage rates, ticked higher here in the United States. Jay Powell made a few statements that I thought were very, very interesting today, and a lot of it had to do with tariffs. A lot of it had to do with we can stay higher for longer. That should theoretically be bullish for the U.S. dollar, but it doesn't look like anything's going to save the U.S. dollar right now, at least not from the uncertainty facing the U.S. economy and the greenback. Unbelievable stuff, guys. It's been an absolutely great week to be trading. It's been a great 2 weeks, probably the top 2 weeks I've had in a very, very long time. So I'm happy to be here. I'm ready to rock and roll. If you have any questions at all, be sure to weigh in. Now, what we got going today, there's a lot you can do on a Wednesday, and there's a lot that you got to watch out for. Every Wednesday, EIA crude oil inventories report. That's going to make crude oil go crazy. I'm going to go ahead and recap that, and we're going to break down U.S. oil for you as well. I'm also, with the kinds of things that we're seeing out of the Iran-Israel situation, anything can happen at any given moment. Right now, we have a tentative ceasefire. We're going to cover that as well. And then we've also got Trump at NATO making headlines again today. That seems to be what he does every single day. All right, let's go ahead and get this party started with a little bit of a trade follow-up. Now, trade follow-up is relatively straightforward here. This is something that I post in the How to Trade trading room. If you're a member over there at How to Trade, all you do is click on my picture, click follow. These are emailed out to your inbox immediately, so these go pretty much all over the world. We've done pretty well this year. We've had a few lately that haven't been that great, but our risk is always in check, and what we have is just a pretty strong approach to the markets. I mean, I believe in it. I love key levels. This is a pure key level trade. There's no Fibonacci's, there's no indicators, there's nothing. This is just understanding what a double top is. Double tops are easy, guys. You see a double top, a monthly double top. You absolutely have to price these into the market. It's absolutely imperative, because if you ignore things like double tops and key levels, you're going to run into trouble. So right here, what do you got here? We've got a key level of right around 200. Now, this is a trade follow-up. This is a trade idea that we put out earlier today, and it's for 100 pips. And what we're looking to do is scalp right in front of that key level. So the key level is 200. We've got a daily double top that's right beneath that, somewhere between 199.50-ish and 199.81. Now, that's a key zone. That's a key zone. Let's get right out to price action. And you'll see right here, there's your double top back October of 2024. And then you've got a November of 2024, really a key period in the markets this October of last year. You remember the carry trade came undone for the Japanese yen. It was absolute chaos. And then what did you have in November? Well, what you had in November was you had the election, the U.S. election, and things sort of stabilized here in this guppy, this Great Britain pound Japanese yen. We went sideways. Well, I love 200. I love key levels. Big round numbers are everything. I place an incredible emphasis on big round numbers. And what I mean by that is a number that is going to attract two-way action. And two-way action is very, very simple. Number one, you're going to have buyers at 200 and you're going to have sellers at 200. For me, I expect a little bit of a fight at 200. I don't expect price to break right over it. And with that in mind, I want to sell right in front of 200. So our trade idea, we're going to be selling 199.74s right in the middle of this double top in front of this 200. And I think that's going to give you a pretty good chance to succeed in what is sort of a dynamic market. Now, if you're trading right now today, clearly you're going to want to have a bullish bias. If you go down to a 4-hour chart, you can see exactly what's developing, and it's just basically it's an uptrend. There's no question about it. There's a nice big leg up. If you're an Elliott Wave fan, just to run through a few different concepts right here. If you're an Elliott Wave practitioner, that's going to be your 1, that's your 2, and now we're in the midst of a 3 on the 4-hour time frame. I highly recommend the 4-hour chart, especially when it comes to Forex. Forex is a 24-hour market. You're going to want to make sure that you do not ignore any part of a Forex trading day. Now, you can scalp during the U.S.-London overlap. That's what I highly recommend. Or maybe if you're going to scalp the Japanese yen, you do it right after the Tokyo Open. But what I'm saying is this. The Forex is a 24-hour monster. It goes all day, all night, and it goes from Monday till Friday. So for me, a 4-hour chart gives me a real good look at what's been happening to price action with sort of an intraday type of motif. So what do you have here? Well, you've got a nice big run. You've got a pullback, and now you've got the next run up. To me, I would definitely favor the top side of this market, at least until we get up into our splash zone, which is about another 150 pips up the way. So if you wanted to trade right now, I'm a big fan, big practitioner of Fibonacci retracements. I trade 38 and 62 religiously, and I also trade 78%. I love 78% as well. 62%, the back end of this golden zone. I've got my 13-period EMA right there, 197.63. That's a pretty good level right there. 38% is right around 198. So that stuff right in there, you could definitely intraday scalp that right now. I wouldn't have any problem in that. On an intraday basis, I want to make my mistakes to the long side of this market because a bullish bias is warranted. However, we've identified sort of what I would call our kill zone, and that's right up in here, right in front of 200. I would be shocked if this market just breaks through 200 with reckless abandon. I don't see that happening, but it could. Now, if we do steamroll through 200, we're going to go ahead and take our loss there, and then we're going to look to scale in on pullbacks. And when the time comes, I'll give you exactly the layout and how to approach that type of strategy, that type of mentality. It's sort of an interesting way to trade, guys. And remember, those of you that are over at Switch, if you do want to go ahead and trade, be sure that you check in with Switch. Bring your ambition into focus with thousands of markets, zero commission trading accounts, and also some of the tightest spreads around. So definitely check out Switch Markets if you're an international client. And most of you are clients of Switch Markets that are watching this. So you know exactly where it's at and where the time is. Now, remember, if you have any questions at all, be sure to ask. That goes for our friends and users over at How to Trade as well. If you have any questions at all you'd like to ask me, go ahead and fire away. And for our Switch Markets community, just right there in our YouTube thread, feel free to ask me anything you like. You've got me on retainer for about the next 25 minutes or 30 minutes. We'll stay as long as it needs to answer all your questions. So for right now, a little bit of my background. I've been in the market a long time, since 2011. I've been doing this for, let's just put it this way. There's an old book from Malcolm Gladwell, and it was something about being an expert, a true expert, or greatness. Part of it was 10,000 hours. You have to have 10,000 hours in a discipline. I've got my 10,000 hours in front of the markets. I have a pretty good idea of what's going to happen on a daily basis. The only thing that really does shake me up is news events that we aren't ready for, and we've seen a lot of those. Last week we made gold absolutely sing. At least I did. My own personal account was very, very good, and this week is panning out to be very, very good as well. And a lot of that comes from just being around. So if you're interested and you need any advice or help with your trading game, just be sure to reach out and ask me. If you don't get to it on this live stream, or if you watch it on delay, head on over to How to Trade, click on my picture, send me a private message. I'll be sure to get back to you. Also, you can leave them right beneath this live stream on YouTube. Just leave a comment or a question, and I'll be sure to get back to you. I watch these things all day long. So definitely will get back to you. If anybody wants to talk trading out there, I am more than happy to talk trading. So we're going to talk Jay Powell here in just a second. He is sort of the money man when it comes to U.S. monetary policy. And right here, this Euro USD is definitely on the move. I'm going to break that down for you in just a second. Here's the DXY as well. The dollar index 4-hour chart, you can see, is just absolutely falling out of bed, going back to, I believe that's Monday right there. There's your weekly open. There's your big reversal. And we've just come off in a big, big way. So right now, you really have to be bearish towards the U.S. dollar, the DXY. And that's sort of interesting because you had a situation here where, well, you sort of had a real hawkish Jay Powell, and when we start talking about hawkish Jay Powell, What does that mean? It means interest rates higher. It means we're not going to start cutting interest rates just to stimulate the economy. A lot of that's because Powell and Trump do not like each other. I spoke a little bit on the live stream yesterday about how I thought Powell was a political animal or has become one. I never believed that. I've been covering Jay Powell for years and years and years, going back to when I worked for a different outlet as a writer. I used to cover his engagements. That was my job. And I didn't think he was a political animal, and it's clear to me that he is now. And the reason why is they slashed interest rates by a half point last September, right before the U.S. election. They were trying to get a stock market bump. They promised 5 rate cuts for 2025 at that September meeting. The Fed dot plot, the FOMC dot plot, 5 rate cuts, potentially 5 rate cuts for 2025. We haven't had one yet, and we're just about to the end of Q2. What did Jay Powell say today? Well, biannually, Jerome Powell testifies in front of the Senate, a couple Senate banking panels. I believe the House Financial Services Committee or something like that. That's where he does his testimony. And this is interesting because he made a lot of remarks today. None of it really did anything for anybody. It did not move the markets. It did not shake up anything. Our markets are, like the old saying or the saying that I always use, they're as dead as fried chicken. Right now, I mean, we're moving sideways. About the only mover and shaker that we have is WTI crude oil, and even now we're getting into rotation with WTI. So even gold's in flat rotation. The U.S. dollar's in flat rotation. This is interesting. In his remarks Tuesday before the House Financial Services Committee, the central bank leader asserted that the Fed is well positioned to wait on interest rate policies that watches the impacts the tariffs will have on inflation. So basically what happened here is this. Jay Powell passed the buck. He said, well, we don't know what the tariffs are going to do to the dollar, and we're in a pretty good we're in a good position. We're in a good place. We're going to leave it. We're going to be data dependent, and we're going to leave it. Essentially what Jay Powell did was he passed the buck. He's not committing to a rate cut this year. The FOMC has stated that inflation is just a horrible, horrible, scourge, and it is. But there's no plans to do anything. I'm going to go on record right now as saying you're not going to get the rate cut we think we're going to get in September. I don't think they're going to get it. Barring a large-scale war, barring terror attacks in the United States, barring a real recession, which I think we could get. We're going to get some GDP revision numbers tomorrow that are going to sort of shore up what we think. Maybe GDP goes positive. If so, the recession will be off the board. But I think there's a real good chance Q2 goes negative. If we go into a real recession, back-to-back losing quarters in GDP, maybe we'll see the Fed do something with interest rates. If I'm a betting man, and I am, I think there's a real good chance, guys, that you don't get a rate cut. Not in September, maybe December, maybe November. I could be wrong, though. There's a lot of pressure on Jay to cut rates right now in July. We will see. So what does all this mean to the U.S. dollar? Well, it hasn't meant anything, and that's what everybody's really wondering about. If we're hawkish, right? So if we're in a hawkish situation and Jay Powell says we're in a great position to wait with our policy, what exactly does that mean? It means that the U.S. dollar should be gaining ground on all these. Should be gaining ground. And it's not. The U.S. dollar is not gaining ground, and that's a problem. U.S. dollar right now is losing against the majors. You're not losing by much. Our DXY is right around 97, 91, which is about flat on the session. But look at this daily chart on the Euro USD. You're losing ground against the Euro USD in a big, big way. So if I was going to be trading the Euro USD in the near future, I would want to be bullish. We had an entry point on a trade idea not too long ago. We wanted to bid way down here, right around, I believe it was 114.25. We just didn't get it. 114.50 was the bottom. And now you can see price just rocking towards the top side of market structure here, going back to and challenging. We're really taking out the 12th of June's high. So we're making new monthly highs. We're moving north, clearly. We're right around 116.25. I think an opportunity to buy really any pullback is a pretty good idea here for this Euro USD. 115.70, not bad. Not a bad zone. 115.75, that would be great as long as this Fibonacci this swing high holds up here right around 116.42. I don't know that that's going to be the case, though. Let's go down to a 4-hour chart and see if maybe we can get more current. And you can see you really can't. It's tough because you got this nice big move here during that early U.S. session. A lot of news out. We're going to cover that in just a minute. But it all suggests that the dollar is going to be weak. Now, Jay Powell was fairly adamant about not cutting interest rates anytime soon. And what happened here was he said we're not going to cut, and the dollar lost anyways. The dollar should be gaining on these other pairs, and it's not. That should be a major red flag. A major red flag. That means somebody's doing something in the T-bill market. They're dumping excess capital on. They're de-dollarizing essentially. Foreign investors, big investors, whatever. It's de-dollarization. It means they're dumping dollars on the market. And when you have this many dollars on the market, they're not going to be worth as much. And that's what we've seen this entire year. So I don't really know what to tell you. I do know that I fall back on my technicals. When they diverge from my fundamentals, I typically stay out of a market, or I just trade it very, very tight. You can see this 4-hour chart right here. I don't think that I would be looking to get involved on an intraday move, maybe a 30-minute chart or anything like that. I would wait. If this swing high holds up here in this Euro USD right around 116.42-ish, that 115.75 bid is pretty tasty. It's pretty attractive. So I would be watching that relatively closely. Okay, guys, we got a few things that we need to cover here. Fundamentals. If you have any questions at all, be sure to ask. Week 26, we are officially halfway through the trading year. I'm confident your trading year has been a good one. It's been an interesting one for me. Periods of great gains, periods of significant drawdowns. Still moving forward, though, moving the ball forward, looking forward to a great second half. I think that this summer is going to be just a beautiful time to be a trader, and I'm very much looking forward to it. All right. Here's your news cycle. Here's what was on tap for this week. Monday was U.S.-Iran, 100%. That dominated the news cycle. Tuesday was all about the ceasefire, the Iran-Israel ceasefire, and Trump getting heated with the media, talking about the violation of that ceasefire. Today was about Jerome Powell and speaking. Honestly, Powell did nothing to move the markets. Tomorrow, U.S. GDP and durable goods. You're going to want to check those numbers out. GDP may actually move the market because we are all wondering if there's a recession. We'll have all that coverage for you live tomorrow over at the How to Trade.com YouTube channel and in the HowToTrade.com trading room. Friday is the core PC price index. That's a big one. Friday is a big one. That's a big release. That's a big number, and something that we're all looking at very, very closely. Core PCE is the Fed's preferred inflation gauge. And what happens is the Fed looks at these with a very, very, very close eye. They love core PCE. They love PCE better than they love CPI. So that could be potentially a big market mover to close the week. Typically, I don't like trading Fridays, at least not very heavily. Probably going to be trading, though, core PCE and NFP. Those are two events that you definitely want to trade. Now, my own personal psychology, Tuesday, Wednesday, Thursday psychology, it's all systems go. Primary objective is to hit our weekly P&L, aggressively trade our plan, focus on our execution. If our strategy says trade it, we trade it. Volume's there, liquidity's there, everything. We have all the fixins. We have everything we need to make a little bit of money today. We do. It's all there. It's all there today. It's all there tomorrow. It was there yesterday. Now, does that mean take crazy risks Tuesday, Wednesday, Thursday? No. It just means if you're going to take a risk, those 72 hours are the best time to do it. That's my own personal psychology. That's what I've put together from my own playbook, showing you my own beats. I've taken some bad losses on Mondays and Fridays. Tuesday, Wednesday, Thursdays, not so much. And that's just about understanding how you trade, your own personal approach to the markets. News of the day. What do we have today? The MBA 30-year mortgage rate came in at 6.88%. That suggests that lenders are raising rates in anticipation of hawkish policy. 30-year lenders, mortgage companies, banks, investment banks, commercial banks, they're not stupid people. They know, and they tend to agree with me that maybe those interest rate cuts aren't coming. Something to think about there. Fed chair, we already talked about Powell's testimony, and really he just said nothing today. Yesterday's statement about well-positioned to wait really was the biggie. New home sales, this is a big one. This sort of suggests that maybe we are heading into an economic contraction. Negative 13.7% month over month. That's a big drop in new home sales. That was way down from a 9.6% gain that we saw in April. That does suggest real estate puts us into everything. Real estate puts us into everything. That means that the home builders, if they're not selling new homes, that means the home builders are going to shut down. The permits are going to shut down. The excavators, everybody that does the utilities, the materials providers, the lumber, the drywall, all of it that goes in to typically most housing projects here in the United States, it all suffers. Not to mention the logistics company that transport all those things around. So if you start to see real estate, new home sales, existing home sales, if those things start to really shrink down, like what we're seeing right now, you've got to be very, very careful with what you're doing, because that suggests that an economic slowdown is developing. To me, real estate, new home sales, existing home sales, permits, building permits, those things are all leading indicators of potential recession and or expansion. I pay attention to them just because I've been doing it forever. But can you actually trade those numbers? Not really. But they are good to know. They are good to know because if, in fact, this low new home sales number is followed up by a bad GDP number tomorrow, then people are really going to be wondering if we're going into a recession. I got a feeling that we are. I could be wrong, though. In any case, crude oil inventories is what we want to cover right now. Crude oil inventories came in dramatically low, negative 5.836 million barrels. That was well beneath what was expected. And coming off the back of really just a horrible week, this has been a brutal month for crude oil inventories here in the United States and suggests that the U.S. production is not online. It's not online where the Trump administration wants it, and we're about 6 months in. I don't know when it's got to pick up. It's got to start picking up sometime. This right here, this paragraph is the third paragraph of the EIA Petroleum Status Report, the weekly summary. I recommend reading the third paragraph of that. You don't need to read anything else if you're a crude oil trader. Here we go. U.S. commercial crude oil inventories, excluding those in the SPR, decreased by 5.8 million barrels from the previous week. At 415.1 million barrels, U.S. crude oil inventories are 11% below the 5-year average. That's it. That's all we need to know. We know that it came in negative 5.8 week over week. That's big. That's on the back of a negative 11 million the week before, and now you're running 11% below the 5-year average. We got an oil shortage setting up. There's no two ways about it. Now, if you read more of the report, you'll see that the refined fuels, we didn't see a big spike in refined fuels. So it wasn't like we were just making a ton of gasoline out of all the oil. That's not what was happening. Imports were up a little bit. Exports were down, and you've got a real problem here. You've got a real problem. You're running 11% below the 5-year average. Now, during the summer months, it's not uncommon to see oil supplies drop. It's not. But what's surprising us is that they're dropping at the magnitude that they are. Now, that's a bullish market driver for WTI, and we've seen some bids come into the market realistically since we had that big number. So what we want to do is we want to make darn sure that we understand what's happening with WTI. And, well, you're starting to see the bounce today after a big negative 2 days. And I'm going to go ahead and pull the chart here in a second. It's not a pretty thing. Right here, what do you got? Well, you've got some interesting things. This is your chart. This is your weekly inventories. You've got 5 losing weeks in a row, and you've got a really just a brutal late May and brutal June. Stocks are way down, guys. They are way down. That's a big problem for the Trump administration. If they cannot get oil supplies where they need to get, then it's going to be really hard to get that crude oil down to about $40, $45, which is where the administration wants it. They know $45 crude oil really knocks inflation down in a big way, and so you're going to want to just keep a close eye on that. Now, a couple of things that we need to look at here. I'm going to go over 2 commodities here on your MT5 platform. Remember, I'm going to talk a little bit about our Pine Connector feature yet again this week. We've got a few of you that are using Pine Connector out there, but not many just yet. But we think that it's going to be not necessarily the wave of the future, but it's definitely going to be an interesting piece of technology that's going to be able to let you integrate your trading view with MT5, and that's absolutely huge. That's what we want. Something like this on this type of chart, WTI. Now, there's no two ways about this. This is a daily chart. What do you guys think? That is carnage. Opened at 78.85-ish, 78.50-ish. Now we're down at about 66. That's a $12 sell-off in just over 2 sessions. Now, that's all on the back of peace. We all believe, energy traders believe that it's peacetime there in the Middle East. They believe that that's pretty much the end of the Iranian-Israeli, war. I guess call it a war. Yeah, they declared war on each other. It was a war. So 12-day war. Let's say that it's over. Let's say that the ceasefire will take hold. Let's say negotiations are coming. Everybody unloaded their crude oil. Now, we went over and over and over the Strait of Hormuz and all the different things that could happen, and what do we really think is going to happen over the long term? Well, I'll tell you this. I mean, Trump basically said that the war is over today. Now, does he know? Probably not. Does he want the war to be over? Yeah, after the U.S. airstrikes, it's a tremendous victory if, in fact, there is going to be a settlement, a peace deal, and the war will be over there in the Middle East. But as far as our price action goes, the world believes it. Right now, the energy traders believe it, usually a pretty sharp group. Now, what I'm going to show you is an interesting way to look at this price action. There was a trade yesterday that was, in my view, a slam dunk, and it was selling Tuesday's low beneath Monday's low. It was a very simple trade. It was not a hard trade to do. And what you were doing is you were looking right there at Monday's low, somewhere right around 67, 96, something like that, and pretty much selling underneath that $68 was going to get you home, and it did. And it did in a big way. The shorts won the day. Now you're starting to see a little bit of a rebound. Now the reason why you're getting that rebound is because of the WTI number today. The EIA numbers coming in and seeing just how far down the United States is with their crude oil stocks. There's no question about that. So right now we're printing about 66.80. Personally, I want to sell 67 and a quarters. I think that's going to be a pretty good sell. I still want to sell with the price action, but I'm going to show you exactly how to draw a real easy trend line. And I've got a lot of interest lately over these trend lines. Let me see if I can actually draw one here using MT5. So we'll be doing something like this. Now you'd say, Shane, that's not a trend line. Come on. And I'd say, listen, you've got to be flexible with the way that you think. This spike low, there's no question that spike low is relevant. That's a nice swing low. I believe, what is that, May? Some May's low potentially. Now down here is May's low, but you see that this is sort of I would say the late May's action, maybe early June. This right here, if you connected that with yesterday's low, you had a pretty good idea where the market could potentially give way. We knew that if it broke beneath that low, we were going to dig down here and really challenge it. Now, a lot of folks are going to look at that and they're going to say, Shane, come on, that's not how you draw trend lines. You're an amateur. And I'm going to say, no, I'm not. Why? How can I draw a trend line right there? I'm going to draw another one that'll work just as well for you. But why would I draw a trend line right there? Remember, a trend line's only 2 touch points. That's all you need, 2 touch points, and then you're looking for the third. There's 1, there's 2, and then there's the break. The break beneath the trend line is a big deal. You're still very bearish. Do you want to sell a pullback up there? Absolutely. 68.88s, we're selling out all day long right from that trend line. Okay, that's fine and dandy. Let's go ahead and take that off the chart and see if we can't work a little bit better trend line for you. Now, the professionals that draw these things for a living, they would have drawn their trend line something like that. That's how it would have looked. 1, 2, there's your second touch. There's your third touch, so it was support, and then you get the big retracement, and then you just hammer that. The problem with this trend line is what are you going to do? Where are you going to sell it? You could have sold it right there on Monday's close beneath the trend line and still got into a heck of a move on Tuesday. The problem that I have with that is that if you sell right here, you just sold on the back end of what? A $10 move? You had a $10 sell-off. You sold near the bottom of it. The only confirmation is this trend line. I say wait. I say wait until this bar breaks beneath yesterday's low. What is that going to do? It's going to wash out all of the intraday longs. There's going to be a lot of retail longs that have just bought the market thinking they're going to rotate back up in. They're not wrong. They're doing the same thing today. Buying right here, thinking you're going to get a bit of a rotation back into that huge sell-off. That's probably what most retail traders did. It's a cheaper trade, and they thought they could get a little bit of money there. It didn't work. However, the way that I look at it is if you're going to say, okay, here's where we're going to base this off of. There's our touch point. Boom, boom. I know I'm in business right when we break beneath yesterday's low, or excuse me, Monday's low. That's what I call a breakout trade. I've been a breakout trader beneath these key levels for a long, long time. And anytime you have a key level that lines up and you can actually incorporate something like a trend line into it, it's just that much stronger. It's just that much stronger. So you definitely want to take a look at that. I think that's a fascinating way to trade. As far as what's going on today, you're just rotating back up into the center of this. If you wanted to look at this trend line, you certainly could. If you want to do something like that, you could. If you want to be a Fibonacci trader, to me, it's relatively straightforward what needs to be done. Pullback sell, 70.50. That's a beautiful pullback sell. You almost have to take that. So you're going to want to be diligent in this crude oil market for the next few days. I think you could definitely get some great sells in here. Do I want to sell beneath yesterday's low? It's attractive down there. Yesterday's low is right down there in WTI. What is that, 65.19-ish? You might have an opportunity to sell beneath 65 and make some money there. I would hold off on that, though, and be in. I'm more interested in selling pullbacks at this juncture. Maybe we'll get this market to flatten out, and we'll have an opportunity to potentially get in there and see if we can get anything done. I think we will. All right, I do want to look at gold here on MT5 too as well, because this is sort of our trend line that we had drawn. If you remember the last time we met, you can see right here, spike low down here. And remember, these things aren't necessarily exactly perfect. Make yours perfect. This one right here was right there, bang. There's your second touch point. There's your third touch point. And then you came right there with a doji. Now take a look at the doji. The doji does not close beneath that trend line. Can't do it. Right here, could you have sold on this doji? You could have sold on this doji if you wanted, but take a look at what happened on Monday. The market gapped up and got away from you, so you really couldn't have taken that trade either. That's a Friday trade. I don't recommend. I mean, to go home short gold over the weekend, oh, man, you need to have your head examined doing stuff like that, especially in this geopolitical atmosphere. So what happens? We gap up, and then we come off. But that sell right there beneath the trend line after we failed at said trend line, that's a monster trade. And I know some of you got it. I was talking to some gold traders that did very well. I'm trading gold to the short this week. And if you're one of those, congratulations. Absolutely congratulations. Now, remember, if you want to integrate your trading view with your MT5, all you need is this Pine connector. Go ahead and check it out. It's got a 14-day free trial. We're working on some content. Like I said, we're going to probably have that out in the next few weeks, but we're working on sort of a little bit of a suite there that can get you up and running with Pine connector, and you can be a Pine connector pro. That's for sure, a Pine connector pro. All right, everybody. Well, I mean, the engagement on this stream was limited. Maybe the live chat's not working or anything like that. Didn't get any questions today, that's okay. If you watch this on replay, just feel free to reach out to me and send me a message. Either leave it in the comments section below. I'll be sure to answer, or you can head on over to How to Trade and send me a message as well. But that's about a wrap for today's version of Switch Markets Live. We've got some pretty good stuff coming our way in the next few weeks. If you're having trouble trading, don't worry. Slow down. If I could give anybody a bunch of advice right now, slow down. Make your decisions good ones. These daily ranges are absolutely huge. They're staggering. They're huge. You don't have to do a whole bunch to make a lot of money in this environment, even if you're making a few trades a week. Full disclosure, I haven't made many trades at all this week. It's okay, though. I know that the perfect trade's coming for me. I know it's coming tomorrow, and if not tomorrow, probably after PCE on Friday. I know it's coming. And when you know it's coming, you just wait, and then you put your leverage on. And if we have to make our weekly P&L over the course of 2 or 3 trades, then we'll do it. We just adjust our strategy accordingly. That's all there is to it, guys. All right, I'm going to go ahead and sign off. Absolutely, Dave F19, you're absolutely welcome. So I want to thank everybody that watched over at How to Trade. I want to thank everybody here at Switch Markets that watched the live stream. I think that we're in for an interesting couple of days in the market. So if you're fascinated by trading, if you're just starting out and you want to know more, feel free to reach out to me personally. I'm more than happy to help you. If you are a veteran trader that's struggling and you want to talk a little bit of trading, maybe I could point something out that can help you. Or if you're just a trader that's knocking it out and you're making money each and every day and you want to call in. I wish this was a call show so people could call in and I could listen and answer your questions. If you just want to write to me and say that you don't know what you're talking about and I can trade better than you, I also love to hear that stuff. I love to talk to traders, especially those that are successful and know it. All right, guys, a lot of swagger, a lot of confidence this week. Stay with it. Stay with it. We're going to be back tomorrow on the How to Trade Network. We're going to have the Scalping the 9 EMA with RSI confirmation. We're going to do a scalping workshop there. A lot of people really love those. We're going to execute one tomorrow. Probably going to have to cover some news events. I may be adding a live stream or 2 towards the end of this week. But there's going to be a lot going on here until we close up the trading week. We've got about roughly 60 hours, something like that. 60 hours left in the trading week. We're going to kill it from now until then. So if you need anything, be sure to reach out and let me know. I will do my best to help you. And that's been Switch Markets Live. So thank you very much for joining me. Have a fantastic trading session. Have a great trading week. And as always, trade the action well, and we'll talk soon. See you.